For the past 5 years, I've been studying ICT concepts ranging from his private mentorship all the way up to the 2025 mentorship. I've been through bull markets, bear markets, Forex and futures. I've been through it all. I've accumulated over $140,000 in payouts in under a year, and I'm funded over $6 million. I've backtested every single ICT model he's created, and with those 5 years of experience, I've came to the conclusion the best ICT model to trade. In this video, I'm going to be showing you exactly how to attack his concepts and come out profitable, beating the competition in less time. See, ICT tends to get a lot of hate because of the way he teaches. He makes it overcomplicated and teaches too many topics all at once, and also spends half of his streams ranting, so it's really boring to watch. Now, yes, I still watched every single video from start to finish and took notes. I have a bunch of notebooks fully covered with notes from every single one of his videos. So if you don't want to watch his videos, you can watch this and kind of get a basic understanding of what it actually means. The model we're going to be talking about is the 2022 model. Now, you need to make trading simple. It's a process of making it so complex that you bind it all the way down into a very simple model. The best entry model that works so much more better than all the other models is the 2022 model. And so many people let it fly past their head and try to work on something that's more complicated because it sounds better, when in reality, this is everything you actually need because your entry model isn't as important as you think it is. So this is what the entry model kind of looks like. I'm going to be going more in depth about it, but I want to show you the basic of what it is and how it looks like. We're going to be talking about longs today. You can see here that we have buy side liquidity, which is engineered before the move lower. So relative equal highs or lows. I marked that out there with buy side liquidity. You can see this red line, which indicates a higher time frame draw on liquidity. That means that if this is the 1 minute chart, maybe the hourly has some relative equal lows here and price action traded into those relative equal lows, and then later on reversed up higher. This line indicates price action breaking a short-term low, which is again what you need in a market structure shift: a low, a high, a lower low, and a higher high. This box indicates a fair value gap. The middle line indicates consequent encroachment. Now, all these words may sound crazy for beginners, but I'm going to explain what they are later on in the video, so just keep watching and you'll get the hang of it. And you can see price action traded into that higher time frame PD rate, taking sell side liquidity, moved up higher, and then took buy side. Now, to catch this, it's a lot harder than it seems. This is just a picture in hindsight, but to actually find it in live markets, you need to know certain things. So I'm going to be going into in depth about this entry model and how to catch it properly and how to trade with high probability. So this is basically what the model looks like. I took away the candlesticks to make it less complicated and easier for you to read. You want to see engineered liquidity, which is price action forming highs or lows prior to the move lower, prior to the manipulation. So you can see price action forms these relative equal highs, then trades lower, trading into this higher time frame PD array, which is what I marked. But you notice that there's a number here. There's a time frame, 9:30. Price action is best when it trades into a higher time frame PD array or taking sell side or buy side liquidity at a specific time. Now, I'm going to explain a little bit about that in a later slide, but right now I want to show you that price action takes sell side liquidity and then slows down. It shows a sign of rejection to move lower, and then it starts moving up higher. It will retest that level, trading into a fair value gap, and then going back up to these relative equal highs. So that is the basic of what this model is. That is really all you need to know about the actual entry model, because entry models are for precision and not all that it takes to be profitable in trading. There's so many more factors that people actually don't listen to because all these gurus in the internet tell you that you just need a good model to be profitable, and that's so wrong. So when I was watching ICT and I was spending years studying his videos, I came to the conclusion that no matter what model you trade, it's not going to work out if you don't have two factors, and that's higher time frame narrative and daily bias in your favor. Now, entry models and finding that pattern only works if your higher time frame is moving in the direction you think it's going to go. So you shouldn't even be looking for your entry model if you don't have a clear vision on where you're going on the 4 hour, the 1 hour, or the daily chart. So what you need to do to look for longs is have a higher time frame bias as bullish. You also want to be in the manipulation phase, which means a discount. You want to be less than 50% of the range towards your target. And you want to see price action trade into a higher time frame PD array. PD array means price delivery array, like a fair value gap. You can see at 9:30, that's what we do. We consolidate, we move up higher, we retest the range into a fair value gap. We respect that line, which is called consequent encroachment. We trade back up to these highs. So I'm slowly adding on a little bit more complicated steps into this 2022 model. But so many people think the 2022 model isn't that good because it's very simple, when in reality, it's way more complex than you think it is. you're just not doing it right. So here are a few things you need to know and learn about the 2022 model and refine your knowledge about them. So when you go into the live markets, you know everything you need to know about these certain topics. So number one is a fair value gap. If you're new to trading, it's a 3 candlestick pattern when the first and the third candle do not overlap each other in between the second one. If you want to learn more about fair value gaps, I have a bootcamp video in my channel that you can watch. And there's also so many other videos on YouTube that teach about fair value gaps. Next is a market structure shift. So these two, fair value gap and market structure shifts, is what people think the 2022 model is alone. When in reality, that's not even 20% of what the 2022 model is, but they're very important factors that you need to learn. Now, the next point is consequent encroachment. That's a big word, but that is the 50% level of a fair value gap. That is very important to learn because it indicates if price action is going to respect that level or continue trading down lower. If you watch me while I live trade in my Discord, you will see how many times I wait for price to close and respect consequent encroachment before getting into my trades, and how many times I save myself from a loss by not entering in right away. Now, before we get to the next point, I want to talk a little bit about my personal Discord. I have a free Discord and a paid Discord. The free Discord, you can get all information, ask me questions. You can talk to me and my community and basically be a part of my life when I'm trading. The VIP Discord, which you can get a 7-day free trial, you can watch me trade live every single day. You can learn on how I talk, watch my VIP trade journal. So every trade I take, I journal into a section, get a free one-on-one call with me once a month, and get so many other factors like free giveaways. I just gave away a $300,000 account to a lucky VIP member. So if that's something that interests you, go into the link in description and sign up for the 7-day free trial in the Lion's Den and kickstart your career to make more profits in the markets without that stupid stuff. Now back to our point. The next point is daily bias. This is one of the most important things where fair value gaps, market structure shifts, and consequent encroachment do not work if you have the wrong direction. Daily bias is super important because you should only be looking for a long if your daily bias is bullish. A lot of traders blow their account in consolidation because they keep flipping their bias from long to short to long to short. If you stick to one bias no matter what, it's actually very hard to go tilt and catch bad setups over and over and over again because price action can form a bunch of entries on the 1 minute, both bullish and bearish. So when you have a strict bias, you already take out 50% of the opportunity of losses. The next point is highs and lows, equal highs and lows. These are points where price action rejects taking buy side liquidity or sell side liquidity, trades lower, and it's engineered to get taken in a later time. This is what I used in the previous slide. Daily equal highs and lows are a very strong point of buy side or sell side liquidity, but it's not the only point. Now, the last point is very, very important, and that's time. Focusing on time in your trading. Price action does not move randomly at random times. There's specific movements at specific times that can help you understand where price action is going. For example, when 930 manipulates, you can anticipate that price action is going to reverse because 930 is an injection of volatility, or price action speeds up. When that happens, you can anticipate fake moves. It's very important to learn about time, and I'll get into it more on a later slide, but keep a note there. Out of all these lists, star daily bias and time because those are the most important things out of all of these things. Obviously, the next slide is time. Now, what about time? Why do I involve time into trading other than trading during a kill zone, 9:30 a.m. to whatever, 11:30? Why does that matter? Well, because price action will trade into a fair value gap when there's manipulation. What do I mean by that? Well, picture an uptrend. If we're trading up higher rapidly, what do we need to go trade into a fair value gap? Manipulation, trading in the opposite way of trend. Now that needs volatility, and these little time frames where price action tends to be more volatile in the day, like 950 to 1010 macro, is where you can anticipate a fair value gap fill. So when you're looking for your entry and you see a fair value gap get filled at 950 to 1010, you can check that off your list and say, all right, this is higher probability because it's trading during a specific time. Key times to pay attention to are 8:30, 9:30, 9:50 to 10:10, and then 10 a.m. If you want to trade even later, you can do 10:50 to 11:10, but I don't trade to that time, so I didn't add it to the list. Now, why do I have 8:30 here if equities open at 9:30 and that's pre-market open? Because a lot of the times there's 8:30 news like CPI. If price action has 8:30 news, there's a high possibility that that is the manipulation move and 9:30 will be continuation. Now, I have 9:30 as a basic point of manipulation. Majority of the time, you're going to see 930 trade in the opposite direction of where we're going to go to fake out buyers or sellers one last time. Now, 950 to 1010, the macro tends to be where majority of your entries are going to be formed that are high probability. You see 930 manipulates, we chop in between 930 to 950, and then 950 to 1010 break structure and trade into a fair value gap. 10 a.m. is also another point where the silver bullet starts. You can anticipate a specific amount of volatility exactly at that 10 a.m. candle. Here's an example of that same trade that I had at the beginning of the video, but now factored in with time, higher time frame bias, and narrative. You can see we have our engineered liquidity here. We trade lower at what time? 9:30 a.m. We take this red line, which is sell side liquidity, at what time? 9:30. So that's manipulation. You can also see we trade into this higher time frame PD array, which is this 1 hour fair value gap. We then trade up higher, disrespecting this bearish PD array, forming a bullish PD array. And look at this middle line. Remember I talked about consequent encroachment? Look how many times for how long it respects it and shows a sign that it's not going to go lower and hang around in this part of the fair value gap. So when I saw that we started trading up above and we took this high, I added into my position, putting my stop loss just below the fair value gap body, targeting these relative equal highs, which we ended up taking. So this is the entry that you want to find both bullish and bearish. Now, you're not just looking for a simple market structure shift or break of structure or BPR and then take that. You're looking for price action to form that entry after the higher time frame has given you confirmation. The biggest mistake traders make is basically having a set of rules saying I need a market structure shift fair value gap, and as soon as they see one, they take it when there's no reason to be long or short from the higher time frame. Now, trading is very important, and ICT talks about time then price and consequent encroachment all the time. But what he doesn't talk about is how important daily bias and higher time frame narrative is over your entry model. He talks about it a bit, but he doesn't emphasize it for how important it actually is. Now, when I got my first payout, I was making about $1,000 a payout, and now I'm making around $30,000 a payout. And what changed in my trading for me to bring my trading from $1,000 to $30,000 a payout is two things: factoring in higher time frame narrative and time into my trading, and risk management, which is for another video. But the best model you can learn about and really refine your knowledge on is the 2022 entry model, because trading isn't just taking an entry model. It's actually reading the higher time frame bias and narrative, and then 20% of your trading needs to be your entry model, because that's just for precision. Now, once you get used to that and you get good at using higher time frame narrative, couple that with proper sound money risk management, and boy, oh boy, are you going to be so rich. Trading is hard for so many people because they take the easy route. They look for a simple setup because it's fun to do that. It's easy to do that. And it's hard to stick to a higher time frame narrative and proper risk management. But I hope you guys found this video very helpful. If you have any questions, feel free to ask me in the Discord or in the YouTube comments, and I will try to respond to you. And again, if you want to book a one-on-one call with me personally, you can sign up for a 7-day free trial, no payment required, and get one free 15-minute video call if you're in the free trial, 30-minute if you're a paid member. You can also use code BEN, B-E-N, for 80% off all Apex evaluations, including 300Ks or 50Ks. And that's pretty much it. I hope you guys found this video insightful and start using higher time frame narrative a lot more. This is the way ICT trades to this day, and it's a lot easier than just forming a model using a bunch of different concepts. I'll see you guys in the next video. Take care and peace.